Dr. Joe, what up, man? Had some time to review this particular post, and does anyone have any suggestions on getting wicked out and spotting traps, or where I'm messing up? Number one, I know traps are going to happen, all the things are going to happen. First and foremost, the biggest thing to do with this strategy is put the stops as low as you can, right? That will happen. So kind of like you mentioned right here, the tweezer bottoms, you know, having your stop below here, because really on a 3-minute chart, that's not that far. Having your stops below here, even having your stop below here, below this orange line, wouldn't be that much. It's less than $1, right? So getting in for whatever, 64.70, like SPY's average range, you know, is like $3 a day. So you want to have it a little bit farther away. So essentially trading the SPY and the Qs, they're going to be a little bit more trappy just because they have so many stocks on them, and you just have to give yourself some wiggle room. Number two, when I'm looking at this particular trade, so trying to short, I really do like the setup, right? You wait for the candle, it closed below. The main challenge on that is you can see we're out of support. Like we're already here, right? So this is a spot where he's bounced before, and if you're looking to short when the overall market is bullish, okay? So again, the 3-minute chart, yeah, you're trading a 3-minute chart, but you still want to trade in the overall trend, the overall direction. Track down what the overall direction is. So if you're looking at going short, you get a bearish signal, you get your bull candles coming here, you want that breakdown, that retest. I would have tried to short under this candle probably, because this main candle if I was going to go short. But in order to go short, Joe, you still need some type of signal. So if I come back over here to the Qs, we got to be looking for something. And today you'll notice you had 1, 2, 3, 4, 5 bear candles in a row, and then we gapped up today. So on that gap up, 5 bear candles in a row coming down into the 10, overall trend is bullish, and we're gapping up. To me, it just says bullish. So it is a little bit of a trend following system, and you have to make sure you really keep an eye on what the overall trend is. So again, Apple, pretty much the exact same thing. It was a great try, but you did at least flip this one, which was perfect. So you got stopped out on here, which is great. I mean, great try. Again, it wasn't really, it did break support. You had a bunch of selling in here. Also, keep in mind the Qs and the Apple are the exact same thing. So if you short the Qs, you're shorting Apple. If you short Apple, you short the Qs. There's no need to do both, right? If one's gonna work, the other one's not, and vice versa. So essentially put, if you're gonna short the Qs, don't worry about shorting Apple. So that way you only lose 1 R if you lose, number one. Number two, let's say you play just Apple and you short here and you lose, hey, great try, whatever, no big deal. Your flip was perfect. Again, stop loss, I mean, this was like a 40-cent stop loss on Apple, way too conservative, in my personal opinion. Entry was amazing, stop loss needed to be down here, 147.50, and then you ride the trade up. Remember, having a wider stop loss, at least while you're learning and while you're building and while you're growing, allows you to be in the trade, allows you to wait, allows you to practice your holding muscle, and then you can increase your stop once you're in the trade for a little while. We don't have to have all huge bangers. Most of my average win is about 1.3, 1.4 Rs. Do 1.4 Rs on average of 1% of your account every week, and you're gonna absolutely dominate this game. So anyway, man, hope that was kind of helpful. You rock, Joe. Bye. Bing, bong, boom, done. Easy, simple, clean, efficient. You are amazing. Thanks for watching.